Question says, I hear that trusts are taxed at 45%. Why would I want to use a trust? Bruno?
Yes, ask Bruno.
So look, it's a very quick answer. If a person approaches, typically your accountants, in fact, but not all accountants, it's a very black and white answer. Is a trust a good idea? Sure, no. You pay a lot of tax on a trust, not ideal. From a structuring perspective, and this is more planning perspective, it's a completely different conversation to have. Yes, admittedly, a trust is a very high tax rate, right? But we all know that. It depends why using the trust and how using the trust. So it's not so much about the tax rate, it's about its usage. If a trust sits in a holding capacity, and it's not drawing any income and simply just holds assets as an example, right? Then there's no income that's actually flowing through the trust. When do you pay the 45%? When you have income. If you don't have income, you don't have to pay 45%. So if it sits as a family trust and holds your jewelry and your antique paintings and maybe your vehicles and maybe your primary residence, if you want your primary residence to be in there, you're not drawing an income. So what's the issue, right? That's why you'd use a trust. So that's answer number one. A lot of times if you're using a trust to trade, for example, like operating trusts that run as businesses, remember sometimes you'd actually have a company underneath. So again, it technically sits in a holding capacity where it just holds shares, and the company actually does the trading and the tax is paid in the company's name. The company declares dividends. Dividends is already paid within that scope, so it's withheld by the company. So by the time the trust gets dividends, it's not paying 45% tax because the company actually paid. So whether you're a shareholder, your trust is a shareholder, the tax would then be exactly the same. So answer number two, if you're using it to trade through a company, no relevance at all. Answer number three, and this is more a tax hack, is if you have kids or parents or people that are dependent on you that have relatively low tax rates and they're beneficiaries of the trust, you can actually use the trust to move money. This income, you can basically move it directly towards these beneficiaries, meaning that you don't pay tax the trust tax rate, you pay their tax rate. So those are three reasons why trusts work really well, as long as you know why you're using them and you know how to use them.